Hello and welcome to this short video on a quick cash flow forecast for a restaurant company. I just want to demonstrate how quick it is once you have the information ready to prepare professional looking reports for giving to a bank or investors for your business. To start off with, let me explain what you can see on the screen. On the left hand side we have our company information, which I've put together here, starting from the actual information about the background information about the company, interest rates and so on, our sales, our cost of sales, overheads, which are split down between wages, costs, general overheads, financial overheads, fixed assets that we're going to add in the period, and a director's loan. And over on the right hand side we have Cash Forecaster, and this is the most recent version, which is version 5.1.5. and I'm going to input this information into the software and produce some reports, hopefully within a very short space of time. So without further ado, let me begin. So let's start by inputting the name of the company, which in this case is Quick Cashflow Restaurant Company. After that, the next item to change is the period start. So the start date is the 1st of April 2018. So I'll just change that to a 4 to make that into April. And we're going to be forecasting for just 36 months rather than the full 84 months that you can forecast for in this cash flow software. The overdraft rate we're going to be putting in is 5.8%, and the deposit rate is 0.001%. because you don't get much when you're putting money on deposit these days. Credit card charges, because it's a restaurant, they take credit cards, and I'm putting an average rate in there of 1.5%. And then the next information, scrolling down, this company is registered for VAT, so I'm going to switch that on. And in this case I'm going to suggest that the VAT returns are done quarterly. And then you have various other settings in there, but the only one I'm worried about at this point in time is I'm assuming that they VAT register from the very word go, and the reason being is they've got quite a lot of capital expenditure that they're going to claim the VAT on. So I'm going to say from month 1 they are VAT registered. You can change that accordingly if you want to. The next piece of information is putting in some details of loans. So I have hire purchase 1. And the interest rate in this case is 4.5%. The term of the loan is 36 months, and the first payment is month 3. Before I put in the amounts, I'm just going to go down to bank loan 1, and the rate in this case is 3.5%, and the term in this case is 60 months, and in this case the first payment is month 2. So now I'm going to jump across to the data tab, but before I do that, this is a brand new business, but if your business had opening balances, because it's an existing business, you would put those in here, and note the slightly different cell entry of yellow so you know you're entering opening balances. But in this case we don't have opening balances because it's a startup company, a startup restaurant in this case. Let's go straight to our data. I'll just scroll down to our loans. So we entered under hire purchase 1 those interest details and when the loan started and repayment terms, and the advance is in month 2 of £34,000, and the bank loan advance was in month 1. So let's just have a look. Bank loan 1, advance of £45,000 in month 1. So that's all the base information, and the cash flow forecast will work out the rest for you when the payments are, those monies coming into the cash flows and so on. But more of that later because it will become clear as we go forward. So the next piece of information I'm going to be entering is my sales. So let's just scroll up to the top, and the first one is sales of food sales. But actually I'm going to be splitting this between cash sales, i.e. 0 terms, and credit card sales. And the reason I split out the credit card sales is so that the rate I put in is applied to those card sales. So in my description, I'm going to split them between food sales cash and food sales credit card. That's my food sales cash. And my food sales credit card. And while I'm typing, I'm going to put the next one in, which is my drink sales, and I'm going to split these out in the same way. Okay, so now that's my headings done, and you'll notice that at the left hand side it's inherited these headings, which will get inherited throughout your reports as well. The V80 rate, so on food sales all the way through, they're all going to be at 20%, so I'll just change those all to 20% because we're VAT registered. Terms, cash sales is 0 because it's as in 0 months, and you have various months right the way through to 12 months, or negative if they're in advance, up to 24 months in advance. But in this case, this is credit card, cash, and then credit card. I'm going to ignore those, which is to do with factoring. So in months April and May, there's no sales, so our sales start in June. So I'm going to move across to June, and then I'm going to split these between the cash sales of, in this case, 900 and 3,600 for June, and I'm just going to go across and enter those just very quickly. So 900, sorry, moving across to July, 1,100 and 4,400, August, 1,350. 540, September 6,600. Now I can enter October, and November, and then December to March 21, to the end of our 36-month period or 3-year period. I'm going to assume that it increases by £450 per month, which is £90 cash and £360 credit card. So it's quite simple to put a formula in here. But don't worry too much about knowing formulas of Excel. You don't need to know how to use Excel to use this. You could just type over the numbers and work those out and put them in. But it's very simple just to hit the plus key, add that cell there, and then add £90 to that, and that'll increase that. I mean, of course, if you do know Excel, it's beneficial, but you only need to know basics of Excel. And then similarly for the cash, plus that figure, plus 360, and then I can copy those across. But I'm going to put in the drink sales first. So in a similar way, let's start in June. So 300 there, 1,200 there, and then 370 there, and 1,480 there, 450 there, and 1,800 there, 550 there, 200 there, 650, and 2,600, and then finally 680 and 2,720. And in a similar way, I'm going to just do the increments here. That's 120. So now that I've got all of those in there, I can now, let's just move those. These pop-up boxes gives you clues as to what you should do in each of the cells. It's just an aide-memoire. So now I'm just going to copy those all the way across to, it's gone too far, to March 21, and they will increase all the way through. So now I've entered my sales, I need to now enter my cost of sales. Again, the cost of sales has inherited the headings above, which you can leave if you want to. So it will say cost of sales, food sales cash, food sales credit card, and so on. But I'm going to overtype those so that it inherits the name that I want it to, which in this case is food purchases. and then drink purchases. So you see now on the left hand side it's inherited those, and that's what will be pulled through into the reports too. So my food purchases are going to be 0 rated, and my drink purchases are going to be VATable, 20%. And my terms, I'm going to assume are 30 days in both cases, so I'm going to put that to 1 month and 1 month. And then what I've done is I've said that in the first period up to December 18, purchases is 45% sorry, of food sales. So I can do that as a formula. So that starts in June. And don't worry too much about these formulas, because you can just put the numbers in yourself, or if you are up with formulas, and we do have a free support forum, so if you're worried about how to do a formula, you can always ask and we can give you directions on that anyway. Times 0.45%, and then similarly I'm going to do the same. But our drink sales starts off at 0.3 or 30%. And let's just copy that across to December. In fact, I'll copy across to January, because then I can just adjust the rates. So we've assumed that the rates are cost of sales rates improve as we progress through, because there's less wastage. Perhaps at the beginning we're doing more promotions, so therefore our cost of sales is higher. But I'm going to reduce that to 33% for food purchases and 30% to 22% for drinks. And then I can then just copy that all the way across, whoops, to March 21. So now that I put my food purchases in, I can now move down to my overheads, which starts off with my wages and salaries. So let's have a look here. So we have our office manager salaries, chef salaries and waiters. Now I know those aren't headings that already exist, because normally you can click on the drop down, but they're not there. So just quickly demonstrate how you would add those. So I'm just going to scroll down here to my expenses, and then I'm going to just enter those. My owner's salary, my chef's salaries, I'll call it waiter wages. So then I can come back to here and select those. They should be at the bottom here. So I have my owner manager's salary. I have my chef salaries and my waiters. But then also I have my company national insurance too. VAT ignore, but PAYE rate. So the PAYE rate is a rate applied to wages, because normally wages is split between what you pay the individual and what you pay HMRC in tax and national insurance. And you have to put a general average rate, which you should be able to get from your numbers, and a good rate to apply is 20%. Now, there is a 20% tax rate, but this does account for national insurance as well, but also you have tax allowances and so on. So this is an average rate of what gets deducted. So the net gets paid to the individual, and the tax gets paid to HMRC. And of course, there are different timings of when those come out of the cash flows, which is why it's important to put this in. So on here, I put that in each case those are 20%. So that's 20%, 20%, 20%. But then company NI is 100%. In other words, 100% of the amount is paid to HMRC. So none of it goes to the employee. So let's go across here, and then these all start in, let's have a look, they all start in May. So the owner, it's £1,000 per month, and that carries on all the way through, so it doesn't change to March 21. And then we have our chef salaries. They start in the same month, but they from May 18 to November 18 at 1,500. So I'm assuming this is the one chef to November, and then thereafter is 3,150. But I'm going to copy these ones across in a second. So let's do my waiters is 2,200. The same way, and then that changes to 3,465 through to March 20, and then it increases again to 3,300 for my chefs and 3,650 for my waiters, and that goes through to March 21. So that's my wages dealt with. But I've just got to enter my national insurance. Now I'm going to do this as a formula. Again, don't worry too much about the formulas. You can work these out in advance, but it's much quicker to do it on here. And I'm not using complicated formulas by any stretch, and these are very straightforward. So all I'm doing is a rounding formula so that it always rounds to no pennies, because everything is rounded so that there's no small differences on the balance sheet. And I'm going to times that by 0.138, which is the employer's national insurance rate. And then I'm just going to literally copy that all the way across, and that will apply that to all of those numbers and the increases and so on. So that's my wages cost dealt with. So then next, I'm going to deal with my overheads. So I'm going to go through and select all of these headings first. So my first one is cleaning. Then I have rent, which hopefully is down here somewhere, rent. And then I have rates. Somewhere down the bottom, I think. Yeah, rates. Then I have my light and heat. Light and heat, there it is. The good thing is you can't double click these, because as you select these, they disappear. So from the list, that is. So advertising, telephone, printing, postage, stationery, accountancy, which was at the top, remember. So now if I click it, you'll see that accountants disappeared. And they've all of these ones that no longer appear in the list, which just makes it that little bit easier than having to scroll through ones that you've already selected, if that makes sense. Insurance. And notice on the left hand side how these are disinheriting those names, which will get pulled through to reports too. And then finally, miscellaneous, or sundry expenses. Okay. So now we can enter the V80 rates. So the very first one, cleaning, is 20%, rent and rates are 0, light and heat is 5%, and then all the rest, apart from insurance, is 20%. So I'll just quickly run down those. And then our terms, let's deal with those next. So cleaning is paid in 2 months, rent and rates are 0. As in effectively cash payments, and they come out of the bank straight away. Light and heat, we've got 1 month or 30 days. Advertising, we've got 2 days. Telephone, you can either type the numbers in or click on the drop down, whichever's easier for you. I find it easier sometimes to type over it. So where are we? Printing, stationery is 2 months. Accountancy 2 months. Repairs 1 month. Of course, you put your. So I'm just showing you the different variety of what you can do here. And then let's enter the numbers. So cleaning and linen is £340 a month, starting from month 3 onwards. So April, May, June is month 3, so 340. Rent starts from the very beginning, from month 1, and that's 750. So I'm going to do 750 the first 3 months, and then I'll be able to copy this whole column all the way across. Rates same, 500. The first 3 months. Light and heat starts in month 2, which is 320, 320. Advertising starts in month 2. We'll really start advertising before we open, just to get people knowing that the restaurant is about to start. So telephone from month 3, 200. Stationery from month 3, which is 250. Accountancy, they want to charge us beforehand, so that's 500. Start to get advice early on, always a good thing to do. And 75 repairs, insurance from month 2, 350. As we've already got the premises, a good idea to already start insuring it, even though in this case we're renting it, to make sure that lines up with that one. And then all I'm going to do, I'm assuming for this particular exercise that these remain the same throughout the period, or the 3-year period to the end of March 2021. That's my overheads entered, and then all I need to do is put in my financial overheads. So I can select from the drop down, and there should be something called bank charges in there. VAT 0, terms 0. And then starting in month 2, which is May, £50 a month, and then I'm just going to copy that across. Of course, these figures can fluctuate, but for demonstration purposes, I'm going to just put those in as the same all the way through. So now we have some asset additions when we've built our kitchen. I'll just show you how to quickly enter those. So the first one is kitchen equipment. So I'm going to change that to equipment. Our V80 rate is 20%. Just move that out of the way so we can see what we're doing. The month of the transaction. So we're saying we bought this in month 2. It's a purchase, and the cost of acquisition in this case is £25,000, and that's all the entries you need to do. And then the next one is furniture. So I'll put that in furniture and fittings, 20% again, and that also is in month 2, and the cost of that is £15,000. Now, just so you know, within the settings, it's already defaults to various depreciation rates. So equipment and fixed and fittings are depreciated at 20% reducing balance, and you can change these to whatever you want, and then you've got these various rates you can apply here, but I'm going to leave them as set. So by just entering that information, it'll put all the entries in the right places: the VAT, the cost of acquisition, the cash flows, and then the depreciation going to the profit and loss account and on the balance sheet and so on. So all your entries are done for you. So then the last piece of information is my director's loan. Let's just scroll down to my director's loan, and in month 1 he puts in £35,000, and that's all my entries. So within just over 20 minutes I put all my entries in. So now I have all my reports. So let's jump to my cash flow report. Now I'm just going to maximize this so that you see the full report. Now you'll notice that there are extra lines for other information that you might need on your cash flow. It caters to pretty much every single reason you need for cash income and payments and so on. But there's a very quick way to get rid of the lines where there's nothing on. It's just a Control-N, and it gets rid of all the 0 lines. So what this will show you is you've got your receipts, which are monies in from your sales, but of course these are including VAT. You've got your director's loan and your loan advances coming in here. The first VAT entry is a VAT repayment, that's calculated that automatically, and then interest income because you've got money in the bank based upon the rate you put in there. And then your payments, your cost of sales payments, and this will be the right timing, including VAT where relevant. So if, for example, your payment terms are 1 month, they will be in the month after the costs incurred, and so on. Then you've got your loan repayments automatically, your capital expenditure, the total of those two things, and so on. PAYE payments, and then your V80 quarters by the second quarter is a repayment, and so on. And then it will give you your closing bank balance. Starts off healthy because we had all those bank loans, and then it reduces down. But it also shows you your loans here, so it gives you your net facility. And then this will show you the following 12 months to March 2020 and then March 2021, so your 3 years cash flow forecasts. And then if you wanted to print those, you just would print, and there you have your 3 years cash flow forecasts for quick cash flow restaurant company. And this format is very much accepted by banks, would be accepted by investors and so on, because it's very clear, it's very concise, and it shows all the inflows and outflows of your business. And then you can go to the next 12 months and then the next 12 months after that. Having a quick look at the profit and loss account, again we can do a Control N to get rid of the extra lines that we don't need in this case. But of course, like I said, with the cash flow forecast, it caters for pretty much every single eventuality for most types of business. So then this will give you your net turnover or sales, so it's net of VAT, and in the month of sale versus on the cash flow is when the money is received. So it's automatically sorted all that out for you. It will summarise our expenditure, split between wages and salaries, general overheads, financial overheads, and our depreciation. So it's brought in depreciation automatically for the month we purchase those assets. And that will give you a profit and loss before tax, after tax, and then retained. Now I haven't switched tax on because I thought it'd be an extra complication, but you have got the ability to play around with tax, losses brought forward, carried forward, and so on. So you can play around with your tax, or just straightforward just put in a 20% and the month it's paid, and so on. So that will be brought into your profit and loss account and into your cash flows. So as with your cash flow forecasts, you could print those, and then it will show you your forecast profit and loss account for the first 12 months, month by month, by the way, and then your next 2 years, and so on. The other report that you're given, and I'll do a Control N to get rid of the extra lines, is a cash flow statement. A very important and useful report for any business. So this will show you the actual movements of cash in each of the months. So starting off with your net income from your profit and loss account, and then adjustments for non-cash movements like depreciation, increase or decrease in trade payables, interest charges, and so on, because then they're brought in further down, VAT and PAYE movements, and then your cash flows from investing activities, so obviously our fixed asset investment, our loans received here, to give you your net cash movement, which will agree to your cash flow forecast. And again, in the same way, you've got your 3 years. So if I was to print that, you've got year 1, year 2, and year 3 in the same way. There's also your overhead report. I'm going to do a Control N, so it cuts out all the extra lines. And this will give you a breakdown of your wages and salaries. These totals get taken through to your profit and loss account, and then if you want to see a breakdown of that, so if you remember, we put our owner manager's salary in at £1,000 a month all the way through. Our chef's salary is starting off at £1,500 a month, increasing in December to £3,150 when we take on another chef, and so on. Then I've got our general overheads, which is pulled through the names we called it, as it has up in here. Cleaning starting in June of £340. Remember, our rent started in April at £750 a month, and so on. Then we've got our financial overheads, so we put our bank charges in at £50 a month starting in May, but notice how it's automatically brought in the interest on these loans. So loan 1 started in month 1, so there's interest started there, and then when loan 2 kicks in, you've got 2 lots of interest. And then also automatically calculated is your credit card charges on the sales. So these get included in your financial overheads, and those are just automatically calculated based on the numbers you put in. And in a similar way, you've got the second 12 months and then the third 12 months, giving you a 3-year or 36-month forecast. You also have a trading summary which gives you the breakdown of your sales. So you've got your food sales, cash, credit card, drink sales, cash, credit card, giving you a total. If you remember that figure, you may not remember, but £6,000 there. Go back here, £6,000 in June, which gets taken through to your profit and loss account. So if anyone wants a breakdown of that, you can see the breakdown. And similarly with your cost of sales. So you've got your net total of 2475, which if you go across to here, 2475 cost of sales. Then you've got your balance sheet. You've got two balance sheets. You've got one which is total at the end of each of the first 3 years. So this will break it down between your fixed assets and then depreciation that gets calculated automatically, your cash at bank, and then your creditors. This will just be your trade creditors, your POA and VAT, directors' loans, but also importantly it will split out your loans and hire purchase between those amounts falling due within 1 year and after 1 year. That will do that automatically for you. Just while I'm on balance sheets, you do have a month-by-month balance sheet if you want to as well, so you see what your figures are at the end of each of the months within your cash flow forecast. The same format, starting with your fixed assets and your creditors, split between due within 12 months and after 12 months and so on, but instead of being just at the end of each of the 36 or each of the 12-month periods, you've got it each end of month in the same way. Then you have your fixed asset summary, which will show you the breakdown of your additions and then how the depreciation is calculated between the two sets of assets, again over the 3 years. You have your payroll taxes, which will show you the deductions from the salaries and then when it's paid, which is normally paid a month later. Then you've got your VAT, automatically all the figures are brought in, turnover, VAT on your sales or your outputs, and then your VAT on your inputs. So you've got your purchases, your fixed asset. Remember there's £8,000 on those fixed asset purchases, which is what gives you this repayment of VAT. And then you've got your VAT on your overheads being automatically pulled through and then paid quarterly. So you've got the repayment there and then these payments which get taken through to your cash flow forecast. You've got your loan summary. So this one is the hire purchase, capital sum of £34,000, and it's automatically brought in the new loan, worked out the interest, worked out the repayments, and there are various ways of putting payments in here. You can have lump sums, end lumps, and all sorts of different ways. You can even put in your own repayment amount, repayment holidays, and so on and so forth. And then the other loan will be further down, the £45,000. And that will be spread, that one as you can see is spread over the 36 months, and then this one will be over the 60 months. Factoring, well we didn't have factoring with the restaurant, so I'll jump over that. You have a backup schedule which gives you a bit more detail backup behind some of the numbers in each of the periods in case you need a breakdown of some of the numbers. We've already talked about the monthly balance sheet, but then also you have a report which will give you numbers or extract numbers for profit and loss account and balance sheet for any of the periods. So if, for example, I wanted to start from April through to December 2018, so that would be a short period, I can pull out those numbers for any period. So I could just say from January, say 2019, December 2019. So that will give you my sales for any period within the cash flow forecast. So that will give me my sales, cost of sales, and then my expenditure. And this will break that down. And then below that you'll have the balance sheet at the period end of those months. And that's pretty much it. So within 30 plus minutes, I've not only entered all my data, but I've gone through and shown you all the reports. You could print those reports out. You could write a small business plan to back them up, to put a bit of detail behind the reports, include your assumptions and so on. and then you're ready to go. So you can use this for your own purposes, to work out how much you need to borrow, and then you can take it to the bank to show them what funds you require, and so they can see that you can adequately fund those loans. Or if you're looking for investment from family, friends, or angel investors, again, you can use these cash flow forecasts to demonstrate how your business will be operating. But never underestimate the importance of having a business plan to support it, with your assumptions of, how you assume your sales are going to be, what they are, how many staff you're going to have, and the wages and the rent, and all these sort of things that you should include in your business plan that should support your cash flow forecasts. And that's it for now. Thank you very much for listening, and I hope you got something from that. If you like this video, please give us a thumbs up. But equally, if you want to find out a bit more about Cash Forecaster, there is a link below too to go off to bowraven.com, and that will take you to Cash Forecaster, so you can have a bit more of a look at the software there. You can cash flow forecast for any period from 12 months, 24 months, 3 years, 5 years, up to 7 years if you want to. But in this case, we did it for 36 months. So thank you very much for listening. This has been Russell Bowyer of bowraven.com, and bye for now.